अधिकतर लोगों को विदित होगा कि पूर्व में काफ़ी लंबे समय तक ट्रस्ट टॉक्स के माध्यम से हम लोग समाज से जुड़ते रहे हैं, और अभी दोबारा इसके रिवाइज फॉर्मेट में इसके सूत्रधार जो प्रसून जी हमारे साथ हैं यहाँ पर, तो इसमें हम लोग नया एक प्रयोग कर रहे हैं जिसमें समाज के विभिन्न क्षेत्रों में अग्रणी बांधव जो हैं उनके ज्ञान का लाभ हम समाज के बाकी लोगों को कैसे पहुंचाएं। एक प्रश्न उत्तर की सीरीज है, एक छोटा स्मॉल फॉर्मेट है जिसमें हम गेस्ट को इनवाइट करके उनके विचार जानेंगे। तो इसी क्रम में आज हम पहला जो कार्यक्रम हम करने जा रहे हैं ये बहुत ही ज्वलंत विषय पर है, और क्रिप्टो करेंसी सभी जानते हैं कि इज इन थिंग, और लोग बता रहे हैं जैसे इसका फ्यूचर अब यही है करेंसी का। तो इसी क्रम में जो हमारे समाज के जो एक्सपर्ट्स हैं इस क्षेत्र में उनका स्वागत करने के लिए मैं प्रसून जी से आग्रह करूंगा कि इस विषय को इंट्रोड्यूस करें, हमारे गेस्ट को इंट्रोड्यूस करें और इस कार्यक्रम का संचालन करें। जी प्रसून जी।
थैंक यू जी। So welcome everybody. Namaskar Palagan. Today's topic is very interesting and it has been creating a little bit of vibe across our group, especially on the business side. So cryptocurrency, NFTs, etc. We have with us a good panel which can talk about this topic. Kartik, he joins us from US. He's been engaged as a software engineer with Betterment Financial, which is a financial broker startup based in New York. Completed his bachelor's in computer science from the University of Florida. And Kartik writes on socio-economic technical topics. He's very active on the community network as well. He's a tech enthusiast, loves to learn new technologies. One of them being our topic of interest today, which is crypto. And he can be found on his very interactive site, which is ikartik.com. Do try that out. We have with us Shilpi. Shilpi has been tracking the tax and regulatory environment across in India in the blockchain space, based in Mumbai, and she has to her credit some widely published papers regarding the taxation framework around cryptocurrency and NFT in India. So welcome Kartik and welcome Shilpi on the show.
Thank you.
I think just to set the context, Kartik, we will start with you. We've been hearing so much about blockchain, cryptocurrencies, NFTs, non-fungible tokens, etc. For quite a long time. We would like to know what are these, how they are related, etc. Just give us a brief context about this, please.
Of course. Thank you, Prasun ji. Thank you, Gyan ji. Savi ko Palagan. As you mentioned, setting the space. What are these technologies? Sabse pehle to blockchain. Blockchain essentially is just a database in the form of a chain of blocks. Those blocks contain information. That information can be anything, really. For most cases, it's containing information about some sort of transaction. So blockchain in the case of cryptocurrencies is just a list of transactions. You can think of it as a ledger, just a bank ledger. It's a list of transactions. What is interesting is you get into distributed blockchain, which is basically that same database, but it's distributed across various computers linked in a network. That's distributed ledger, and that means everybody has a copy of the ledger. So no one person has control over it. So that's where the distributed part comes in. And this whole blockchain technology, this framework is designed to record and distribute data, but editing or changing it is impossible, which is a very good use case for a ledger. You don't want people editing transactions after the fact. So in simple terms, to add another block to the chain in blockchain, you need to do some work. Some kind of calculation is required according to whatever algorithm has been set as per the blockchain's code. And that is called mining. So you do some work, that's called mining. You mine a new block. Once that's added to the chain, it cannot be changed. It cannot be removed. A bit more technical definition for that. Each block contains a hash, which is a compressed encoded form, that's a hash, of the previous block. So you have to build on the previous block to get to a new block, which means if you change any block in between, the hash will change and it will no longer match with the hash that's included in the next block. So the chain is broken. So that's how you keep track of every block, and you can make sure that it's not been changed because it's linked to the previous block.
It's a chain of transactions, block after block. Every new transaction is a new block, and then there is a maker checker kind of concept where a transaction is made and checked by the miner. So he has to put that hash key. Which actually leads us to the question of how is it then, if anybody who can solve that algorithm of the hash and add a new block, how is it controlled in terms of security aspects? No false transactions get in.
What is good about distributed blockchain? That's why distributed is so important. You will have so many different people that are mining. The success really lies in the amount of people that are participating in the blockchain. Without masses, it's useless. The more people that participate, or the more systems, I should say, this is an automated process. Nobody will sit and calculate the next block. It's all part of the algorithm that's determined by the blockchain. That algorithm mandates that this calculation must be done to add another block. If there are many people mining, the calculation will be more difficult as determined by this algorithm. So if there are many people trying to add another block, whoever is able to, whichever system is able to calculate and solve this algorithm will be able to add another block. Then that's only the miner part. There's also a verifier part. Whoever is not mining is verifying. Verifying is very easy. For example, you have to train for years and years to achieve an Olympic medal. But anybody can verify in a few seconds whether you won it or not. So it's very easy to verify, but it's extremely difficult, time consuming, energy consuming to mine. So that's the conundrum. You will spend time verifying, just a small time, but you will spend more time mining it. So there's a maker checker process. And whatever the masses agree on, right? If two people mine the one block at the same time, whoever is able to verify the first one first, that's the next block. The other persons will be added second. So it's all consensus based. You can say it's like democratic, basically.
So from the technology perspective, this is blockchain and it can be used in multiple applications, I understand.
Yes.
How does it get used in cryptocurrency, for example, now? Does
so,
each block represent a new coin coming into the transactions? How is it?
Yeah, so there are two parts to this. Basically, as a digital asset, right, you're saying that something has monetary value, even though it's not backed by any physical security. But that's a common argument against cryptocurrency. So I just want to set the premise for that. There are very few, if any, currencies in the world currently, fiat currencies, backed by some central bank, that are actually based on some physical standard. The US used to be based in gold. The US dollar used to be backed by gold.
Yeah.
That ended in 1971. And I don't think there is any other currency in the world right now that's backed by any physical security. So most fiat currencies in the world today are not backed by anything physical. So it's sort of aligned with cryptocurrency in that it's not backed by anything, any physical asset. Its value is determined by the central bank and it's regulated by the central bank. So in that sense, it's very similar to fiat currencies. Now, where the crypto part comes into play is this algorithm to add transactions to the blockchain, right? To make your transaction legitimate, to say that you have this much money now, you have spent it on something, you have gotten it from someone else, you have to do some work and solve that algorithm. So that's the check, basically. That's the regulatory process. Nobody can say, I have $1 million. You cannot say that anymore. You have to prove that you do. So it's self-regulating. That's for crypto advocates at least, that's the benefit of using cryptocurrency in a very short, simple manner.
Just to give you, I'm sorry, I didn't want to interrupt, but just to take this argument and complete it. पहले गांव में या पुराने जमाने में we used to have these systems of body and shells. Basically, these are shells. Where do the shells come from? They come from the sea. there is a miner who goes out, takes out a few bodies and comes out and stores it with him. As long as the body is recognized by two sets of people, the buyer and the seller, as a means of currency, I mean, as long as people respect it as currency, it is used as currency. So I think there is something similar, if I was right. And if you add on top of it, ki bhai, I will take a body from you and accept it as currency only if you can give me a password associated. That is probably the hash key with the Bitcoin. So please continue, Kartik. You were going great. I was just getting that in my mind in this way.
Bilkul. And that's true for all currencies, whether it's fiat currency or cryptocurrency. It's based on trust in the system. So I guess related to that, there is also a digital rupee coming that finance minister has announced. So digital rupee will basically be on a blockchain, but it's more regulated than, you say, Bitcoin or Ethereum or any of these other technologies.
So we'll talk about that in a later section.
Yeah.
But I just want to clear this initial part. We are hearing so much about Bitcoin, Dogcoin, I don't know what all different types of coins. How are they different? And who is the one introducing these in the market actually?
जैसे कोई भी सॉफ्टवेयर इंट्रोड्यूस करते हैं, कोई भी ऐप लिखता है, एनीबडी कैन स्टार्ट. आपके पास कंप्यूटर है, आपके पास इंटरनेट है, आपने कोड लिखा और उसको इंटरनेट पे डाल दिया, आपकी ऐप स्टोर में लाइव है, कोई भी यूज कर सकता है. ऐप कोई एक यूजर यूज करे, 10 लोग यूज करें, 100 लोग यूज करें, दैट्स फाइन. You can say it's successful based on your own measurement. But for a cryptocurrency to be successful, it has to be adopted by the masses, as we established. Currency is based on the masses. ज्यादा लोग उसको ट्रस्ट करेंगे तो वो करेंसी सक्सेसफुल हो जाएगी. Same thing with cryptocurrency. So adoption is key. उसमें once you build a cryptocurrency, you put code out. The code is public. The algorithm is public. कोई भी उसको इंस्पेक्ट कर सकता है, देख सकता है, अच्छा इसका algorithm mandates this calculation. It's a very simple calculation. So it will be very easy to adopt that cryptocurrency. But it's also very easy. It's very easy to mine new blocks because the algorithm is easy, which means it's the easier cryptocurrency to use, right? So there are fewer checks, there are easier checks. So maybe it's not as secure. So that's the basically battle between different cryptocurrencies. They have different algorithms, different frameworks, different rules and regulations, all part of this algorithm, and it's all public. Whoever adopts the currency, they can see all of that. They can inspect the code. They can even propose modifications to the code. They can propose modifications to the algorithm. This has been done with Bitcoin, especially many times. There are few changes at a time. So it's really owned by the public. If the masses propose some modification and the rest of the mass accepts it, it will become part of the blockchain. It will become part of that cryptocurrency. So it's really driven by individuals and then adopted by the masses. But it's all public.
So Kartik, we are still talking about the definitions. I have so many questions which I will subsequently put forward to you. But quickly, I just wanted to check with you, what is this fungible thing, non-fungible and fungible?
Yes. So in the simplest sense, right? Since we're talking about currencies, you will always want a currency to be fungible. Fungible meaning that it's interchangeable with some equal part. If I give you a 100 rupee note and you give me another 100 rupee note, that's fungible. It's the exact same value. I can exchange that for an equal value note and it's the exact same. Non-fungible is you don't want one to be the same as the other. So that's very important for something like a token, or say even property ownership. Anywhere that you want to verify that you own this one thing and there is only one of that thing, that's where NFT comes into play. Non-fungible token, that's NFT. So originally this NFT concept was intended for artists to protect their music or their art, basically by adding a digital signature to their artwork that can never be forged or removed. And this NFT digital signature would be part of some blockchain, whether it's Ethereum or any of the other blockchains. It can be based on any blockchain. That's not important, but that digital signature is what is important. There is only one such signature. So you can prove that you own this artwork. This is the original artwork.
Okay. So
I guess
each art now, taking the example of art itself,
yes,
each art will be having their own specific digital signature, which is
exactly,
on this. So it cannot be replicated, it cannot be done. So it is
right,
like a copyright actually. Uh,
exactly,
makes sense.
exactly.
I'll
And
take
that verification is done by miners. So again, you go back to, adoption by the masses. They will verify that yes, you do own this, this is a legitimate NFT, and they will verify it and add it to the blockchain. Two more quick examples, if I may.
yeah.
One is diplomas, college diplomas, college degrees, certificates. Those are great cases for NFTs. You can verify them instantly. And to get one, you have to work hard for 4 or 5 years. So the, mining it, so-called mining, when you do your degree and you get, your diploma, that's the work you put in. Once your NFT is issued, it can be verified very easily. And using that digital NFT, I think there are a few colleges in India that have started giving out NFT diplomas. Uh, it makes it, tamper-proof. You cannot make up a degree. You will have to use that code, some hash, something to verify, and it's publicly verifiable. And one more example is property papers. If you have NFTs, it's very easy to verify that you own this property. Nobody can forge those papers for you.
Makes sense. Each unique document which carries any value can be an NFT, and
Exactly.
it paints a very scary picture if you think about it, because I, as an individual, could have my health records, my education records, my employment records, my everything that is associated with me in terms of NFTs. And if this blockchain technology becomes all pervasive, uh, I actually have an entire digital identity out there on blockchain, which can be viewed, I think, by everybody else because it's open ledger, right? So I don't
That's
know.
actually a very good point. There are ways to protect your personal data while keeping the NFT public. So you can say this record has a lot of stuff, it's encrypted. I won't see inside it, but this record I know is legitimate and it belongs to you.
And
So
who's going to stop the
that,
government from accessing it? I mean, I don't know. Maybe governments may not be able to control blockchain because it's so
right.
federated.
Usually that's the premise, is that governments cannot control the blockchain, they cannot see into it, but there are a few caveats to that. But core of the thing is NFT is basically referring to a record. Now that record could be physical record, it could be some address on the web, it can be some URL, it can be artwork, etc. It can even be a picture, just a photo. But all you want to make sure is this record legitimate? Yes, because this NFT is on the blockchain. So that link is the most important part. Now, what is inside the record? Do you want people to see that record? You can encrypt it, you can hold the keys to the encryption and nobody else can see it. So those things are variable. The NFT part of the link, that this record does exist and it belongs to you and it's verified. That's the most important part. That's the core of NFT.
If you, sorry, I just go back to the definition that you gave me. Fungible is where you don't have something of the same value,
Yes.
which goes against that particular asset.
Right.
So I'm wondering if so this, for example, we will take the example of art again, and we say that this art is out there in the market on through the blockchain technology, and somebody may be able to buy it. Maybe I'll direct this question to Shilpi. Shilpi, how do you look at this NFTs? And I see a lot of
Shilpi ji, Prasun,
Ji.
I would request you to introduce Shilpi ji first because she has not been introduced. So, what is her domain and how does she help us in understanding this maze?
No, we did introduce, but I have to add another introduction apart from the fact that she tracks the regulatory and taxation framework on blockchain very closely, especially in the India domain and other geographies as well. There are certain publications which have come out in leading, papers in India, etc., which cover this aspect. So she is actually a very deep expert on the regulatory and taxation framework. Uh,
Before we migrate to Shilpi ji, I have two issues which I think you would bring to fore. One is the morality aspect of this whole business, and the second is the how it impacts our lives, like in a commercial sense. So these are the two things I would like you to articulate, like how does it work?
So thank you, Prasun, and thank you, Gyanendra. And hi, Kartik. It was a very, a very simple term definition that I think you give, which people can understand better. And it is a very complicated topic to talk about and understand also. And Prasunja, how you mentioned about NFT, like Kartik mentioned, it is like a property, a digital version of it. And this is the most modern version of investment in art, if you can see it as the next phase of investment in art. A lot of the content owner or the intellectual property right owners, which could be any of the big broadcasters, sports stars, or even singers and musicians who own the IP in that content, uh, you know, they are looking as NFT as one of the next phase of revenue, generating revenue for that. The craze started with NBA, the National Basketball Association, starting and creating NFTs around the players, the shot which he may have played while putting the ball in the ring, and that snapshot, and they created and used it as a revenue model. Now, why would anybody pay for this? Is the question. It is similar to as a collectible that we had. As kids, we have collected McDonald's Happy Meals figurines. Why were we doing it? Nobody knows, but it just felt special that you had some elusive product which was unique to you, and you could trade it. Or suppose if you collected 3 of those and your friend had the other 2, you used to hand it over to him for 2 weeks and then take it back, or have those Tazos card or these kind of things when we were kids. It just to understand in very simple terms, it's that, but at a much more broader technology and aspect linked to it. But that's how the NFT market is growing. People want to be associated or collect these digital versions of any property. Now, what Kartik mentioned is absolutely right, that it could only be the reference code of that. You may not own the IP. So Mr. Amitabh Bachchan recently sold his voice of Madhushala. But he could have created this on YouTube and also posted on it on YouTube. He could have used that same recording to be played at a gathering. There could be multiple use cases, but its digital version on a blockchain is the only NFT that he was ready to sell. So that was just one version of monetization for him. And that's why I think a lot of companies who own intellectual property rights right now are looking into this as one more way of adding a revenue stream to them.
Thank you for that, Shilpi. It's in easy terms. And I think you have addressed one part of the question that Gyanendra has mentioned, which was the commercialization aspect, monetization of NFT. The other is definitely he mentioned, I think, the moral aspect you mentioned, right? So we will touch upon that. But just before we go there, I do have this question. What you are doing with NFTs, the content creator, for example, in terms of what Kartik was mentioning earlier, is he mining the asset?
Yeah.
And then,
so when you want to do it, suppose if I own one piece of, suppose a unique pen, which I may say was given to me by my granddad, and I want to create a digital version of it, I will go to a miner who will create the digital version of it. And that is when the mining of it aspect comes into being. And once the digital version is created, it is up to me to go to any platform and sell it wherever it could be sold at, or it could be an Indian exchange or foreign. And I can also do it on a peer-to-peer directly without using an exchange as well. So the process of conversion of that into a digital version is what the mining process will.
And who are these miners, like authenticated by some people? Who are these miners?
So I think Kartik would be better, but my understanding says that there are companies who are helping convert this digital version, and you can also I think there are tools available these days where you can put it and create your own NFT. But I think it's a very that's a very basic one. But when you do a little exclusive one, I think it is better to do it through a proper company who does this. Over to you, Kartik. I think
Yeah, the Kartik, in fact, just adding on to that question which has been handed over to you, if there are these intermediaries, and are they authenticated intermediaries, in which case what happens to the entire democratization of our ledger?
Right. Yeah. It's like you mentioned it, there's democratization is like the most important part of it. So there is one thing that you want to mine some NFT. So mining again is just the process of finding a hash that aligns with the previous block, solving the algorithm, and then inserting it into the blockchain. Then your verifiers can verify that yes, this is legitimately added. No, nefarious means were used to add this, to the blockchain forcefully. So mining an NFT is simply that part. You're adding this to the blockchain. Now, do you really own this asset? Say it's a physical asset, like some artwork, some painting or something, or like that shot that an NBA player made. It's a clip of that. So on a blockchain, there's not that much room to add an entire video file. So you will simply put a link to the video file. So your NFT, if you go back to the blockchain and you look at this NFT, okay, so this NFT is this URL points to a video, and this person owns it. And then this person sold it to this person, sold it to this person, sold it to this person. So you just have a transaction history of where it's been, who owns it, etc., etc. And of course, where it is stored. It's stored at this URL, it's stored on this server, etc., something like this. If it's a property paper, you will have the address of the home, for example. So NFT by itself is basically just a record, right? The only benefit you have with NFT compared to other forms of records is it's on a blockchain, so it's not modifiable. Now, you mentioned, are miners legitimate? Are they verified, authenticated? So that's really governed by the algorithm of the blockchain. That's why there are so many different blockchains, because their algorithms are different. So when you have a miner that's solving this, it's not the person that's doing it. It's somebody using their machine, giving their machine for this service, so to speak. So the machine is running the code of the blockchain. That code has been written by many people, and it has been reviewed by many people to work, right? So multiple people have approved, and they know that it works. And because more people are adopting it, more people believe that it works, right? They agree that this is legitimate. The means of this algorithm are, sane. It's not nefarious or, malicious or anything. So again, it's based on trust in the system. If there is something malicious, someone introduces some malicious portion into the algorithm that will verify only certain NFTs, right? It will only be able to mine certain forms of NFTs that favor one party. Then the theory is that other reviewers of the code, people that have stake in the blockchain, will reject that request, So it really depends on trust and agreement of most of the people in the blockchain. 51%, I guess, that's the majority. If they approve, then something happens. Otherwise, it won't happen. So adoption is very key.
So to paraphrase what you just said, I think there are some complexities involved here. So I'm just trying to make it a little simpler. There is one part which is the blockchain of the NFT. Somebody creates an NFT. Of course, you need to have the technical assistance by proficient miners who can create the NFT for you, and you add the block onto the blockchain. It says that you own the NFT with a link to the NFT somewhere, right?
Yes.
And as Shelby mentioned, then these can then be traded on an exchange. I believe you mean Bitcoins or any other kind of, which is where the money trades hands. So again, that's a different blockchain, which is the Bitcoin blockchain. So your block here is traded on that blockchain, on that cryptocurrency, and then and probably that will link back to your block saying that this has changed ownership, etc. So what I want to understand here is there are two separate sets of blockchains. What is the NFT blockchain, which is the blocks of ownerships, and then there is the Bitcoin one, which is the monetary value associated on the trade, right?
Similar. So the
miners. So the question here is, can we mine the NFT or can we mine the Bitcoin, or can we mine both separately?
Yes.
These are two parallel universes.
So you can mine both. And if you think about it, Bitcoin is actually, NFT and Bitcoin are similar, very similar things. One represents a digital record, one represents some monetary value, but the core technology is the same. So on Bitcoin, if you look at the Bitcoin blockchain, it's in the place of record. Say you are imagining like a database table, right? Yeah. One is, transaction date, transaction time, things like that, like a bank ledger, amount that represents, some value of Bitcoin, 10 Bitcoin, 100 Bitcoin. On NFT, one very popular NFT blockchain is Ethereum. That's the second most popular blockchain in the world, second to Bitcoin. Ethereum is used mainly for these types of things, for some security purpose, some token purpose. So NFTs are largely used on Ethereum. So I can say, I have this NFT, put this on Ethereum. Now it's part of the blockchain, anybody can verify it. Then I can go and say, okay, I'm selling this NFT for this much Ether, which is the token for Ethereum. There will be one block that says this NFT with this URL, etc., was exchanged by this person to this person for this much Ethereum. So now you have transactions
verified by multiple people to say this is right.
Exactly. So Bitcoin is similar to NFTs in that it's just a token, right? And one block represents one transaction. Same with NFTs, but it's ultimately a record. So you say, this much Bitcoin exchanged for this much Ethereum, something like this. You can do that.
I have a secondary question here.
Yes.
With normal, normal currency, you have a regulatory authority which issues the currency, and there is certain value associated with it. Earlier, it used to be gold. I don't know what it is today, but there is a basket of things on which you put a currency. The problem with Bitcoin and the mining aspect that you explained to me, I am not what was not clear to me is, can we continue to mine a lot of these coins, and where is the cap on it? I mean, how do you manage it?
That's a very good question. So the premise for Bitcoin is that it is self-regulating. So based on the algorithm, it's anti-inflationary, it's also anti-recession. That's the concept, basically. That's what they claim. If you look at the algorithm, there's actually a mathematical cap. 21 billion Bitcoin can be mined, no more than that. That's the limit of the algorithm itself. I think so far about 18 million have been mined so far. So we are reaching the cap. Yeah. And the whole idea is that the currency has to be scarce enough that it maintains value. If you create so much currency, you see what's happening in Europe, US, inflation is reaching records because there is so much supply of money. That's what drives inflation. So you have to have some scarcity of the currency to maintain value. Otherwise, there's too much supply, not enough demand.
So I'm sure there must be some complex logic on why this cap has been put.
Yes.
But the question is, as we reach near the cap, you were mentioning that, I think the algorithms will continue to become more and more difficult to solve, right?
Exactly. So as you reach the cap, it's basically going to become asymptote, basically. Right. So you will.
So how difficult is this to solve now? I mean, can two mathematicians get together and solve this algorithm, or?
Right. So there will be machines solving this, right? You have heard of server farms that are, in Netherlands, there are server farms that are using enough energy compared to a town, right? As the same amount of energy compared to a town to mine Bitcoin. Things like this that grabs headlines, but you're basically just solving algorithms, right? You're using compute power to solve algorithms. And like you mentioned, the more scarce,
you're saying server farms solving single algorithms. I mean,
right. So because you have so many large server farms in, say a town or even a city, cities are doing this as well. City of Miami introduced their own coin. That's a separate conversation, their own digital asset. So people can own stake in the city, basically. That's their idea. But that's a separate conversation. But they also mine their own asset now. So they are using energy, their own generated energy by the city corporation, and they're mining their own asset. They will then sell that asset to citizens of the city.
And I think this is one of the biggest people think that this is one of the biggest demerit of crypto is that it is not very energy or environmental friendly because it uses so much of power for generating one token in the system.
Yeah.
Right. And so although there are arguments in both.
This is probably where the question to answer is so much of energy and power going into a generation of that. How do we see that? Is it ethical to use these as compared to normal currency? I mean, what is the problem with normal currency? You said inflation and others. I could understand that, right. But again, these are artificial caps on these, right? You have a. No, I mean, for whatever logic.
Even that is not solving because what is happening is that value of rupees 10 is going to be value of rupees 10. But here the case is like the supply is limited, but value can vary. So one crypto can be $56,000. So, I mean, what are you limiting? You're not limiting anything. So even the supply is limited, the monetization of the entire currency in the system will be as the market decides. So that's not safe enough. But my basic question is like, as the finance minister said that we are going to charge 30% on cryptocurrency. So where does, I mean, all this time we have been selling this argument that this is away from the governments, but how does government comes into this? Or is it like legal, like certain companies are willing to sell cars into Bitcoins and then
Right.
raise invoices into Bitcoins? Like, how is it going to happen? How governments will control this in whatever way
Given
people
given
want to share? Yeah.
given that Babus do not understand technology so much as what we assume, there's a perception that we make as normal citizens. Are they even able to catch up with all these complexities?
No,
Are they
once
ahead
you
of it?
declare, no, once my balance sheet says that I sold 20 cars for so many Bitcoins. So now you're in the system. So now they say, Nirmala Sitharaman comes into the play and she says, okay, now give me the 30% tax on this. So this is how it's going to. So that's what Shilpi maybe can throw some light on this, like
Sure.
how it's going to be
So
affecting us. Yeah.
Yeah, so the Indian regulators have been tracking the development in cryptocurrency or the Bitcoin-based, tokens from 2012 onwards, and government realized that this could jeopardize India's economic stability. It could also have money laundering or terrorist financing happening through it, which they will not be able to control or even monitor. And that is why sometimes in 2013 RBI issued a lot of press releases. In the media also, a lot of spokesperson came and said that they want to caution the users, the traders, and highlight the risk of the volatility and say that this is not government backed. So if you're doing this, you are doing this at your own risk. And there have been, and at a point in 2018, government actually even banned dealing for Indians to deal with cryptocurrency. There was there was a Supreme Court judgment which struck down the ban. But even despite that, government has been very hesitant in accepting, or not accepting, actually they have been very hesitant to let people trade in this. And there have also been, Advertising Standard Council has also issued a lot of guidelines that whenever a crypto ad is coming on TV, that has to have a banner as what it used to be for cigarettes at some point of time in tobacco, asking people to do it, that this is not regulated. And if any loss that happens, it will be at your risk. It is highly risky because one reason is that it doesn't have the backing, or the RBI is not backing this currency. And however, government realized that the growth has been very exponential and people are trading a lot, and a lot of fiat currency is being put into this and converting into the blockchain cryptocurrency. And that is why government introduced only in the direct tax perspective that they will be charging it at your profits will be charged at 30%. And they have also put in a lot of regulations to say that you cannot offset your loss or the cost of acquisition of it against your profits, so that the maximum amount gets taxed at 30%. One of this is also being seen by the industry as though government is accepting that this happens in India, but this is also charging it at 30% rate is also detrimental to traders, right? And people are still very wary of investing in it, and are only a few people, at least the masses, they are able to solve that, you'll be paying so much of taxes on it, and it's only a limited few who transact in it who can bear that 30% tax. But from an indirect tax point of view, which is GST, there is still a lot to be done. Government has not come up with any kind of regulation in this respect. And one primary reason for that is that government is still trying to see whether how does this entire blockchain based tokens fall into whether it's a goods or a service, the traditional definitions that have been going on in India, or whether they need to create another definition in the tax concepts to make it taxable. Because for direct tax, it was quite simple to just tax the profits out of this. The categorization for indirect tax purposes is quite a challenge, and government is looking into this. However, the anonymity part of it also plays a lot of aspect into this, because government, for any transaction to happen, we believe in know your customer. KYC forms are done everywhere, from banking to a normal. Even if you go to a restaurant, he will take down your phone number and everything, right? For transactions happening like this, it is very difficult to identify where does the person is located, because in this cryptic world, you are only known by your digital wallet. And it is not necessary that you would be transacting only on an exchange, which government can still regulate or reach out to. I can actually transact with any one of you directly without anybody else being part of the entire transaction. So
हवाला करते हैं लोग तो पता नहीं चलता है, तो इसमें तो there's complete anonymity.
Shilpi ji, I have actually, my question is related to this. What I'm saying is, like, this is about those who don't want to come into the government's ambit. But here I'm talking about somebody who wants to legalize this, use it as a legal tender, and show it in his books of accounts and say that, yes, I have acquired so many bitcoins, and this is showing in my balance sheet. And tomorrow, if the valuation goes up, government will definitely come and charge me the profit. But if it goes down, that government say you cannot set off losses. So how, I mean, this is about how, suppose I want to deal legally into this. So where does government allow me to do? Can I show it in my books of accounts? Can it be part of my balance sheet?
It
Can I
can
go and say that?
Yes, it can be. But as of right now in India, corporates are not using this as a means of collecting payments. But there are globally many companies who have started using it. In India, mostly people are using this for individual transactions. But as per the new income tax returns which has come up, you have to disclose your holding in VDAs. So from 1st April, this has become taxable. They've also modified similarly, we have to disclose how many bank accounts we have, but that has no implication on my tax liability. Similarly, I have to disclose that what all virtual digital assets I own. In case I make a profit out of it, I have to pay taxes, but I need to disclose it. The government is very clear on it, whether you're using this through an Indian intermediary or Indian exchange or through a global exchange, you still need to disclose your holdings. And that's where the government is able to manage or even monitor these kind of transactions.
I'm sorry to pull this back a few notches. I have a basic question that I still need answering. When we started, we said that the ownership is recorded in the block. People can verify that I am the rightful owner of a particular Bitcoin. But I do hear that hackers use Bitcoin as currency and it is traded and it cannot be monitored by any government. Is there a KYC which puts my real identity? Can it be? Is it linked to my wallet, Bitcoin wallet, or is it a complete anonymous wallet which has no bearing on my real identity? That's the question I have actually.
Kartik, you want to take this up because there is no KYC form to be filled in, is my understanding, to when you create a wallet for yourself.
Exactly. There are some, so exchanges, for example, there are few exchanges in the world. They require some KYC if you are adding fiat currencies to that wallet, basically, to then upload to some blockchain. You're going to convert it to Bitcoin. You're going to convert it to some other cryptocurrency. Same thing for if you receive Bitcoin and you want to deposit it in your bank account. KYC is required for those things. But you can transact Bitcoin as is without any KYC, theoretically. I know we also mentioned that you can transact without any exchange in between. So it's not that you are doing it just on a peer-to-peer basis. It's still going through the blockchain. It's going through a miner process. You're putting up your transaction block that you are exchanging this much Bitcoin with this person. Both of your addresses are in the block and the amount is in the block. And you're putting that up into the blockchain for miners to solve and for verifiers to verify. So it's still legitimately going through that same approval process. It's just you're not doing it through an exchange. You're doing it just directly onto the blockchain. So it's still verified and it's traceable.
And if I was a legal, Lakir ka Fakir, and I wanted to declare this as an asset on my balance sheet, I can do so through means.
Right.
But if I do not want to do that, there is a possibility that could happen as well, right?
That is also possible.
You can still get around it, and that happens with fiat currencies as well, right? You can have undeclared income that you don't report. You can have some foreign bank account in Swiss bank or something.
And I understand.
So that happens with fiat currencies.
And when I wanted to convert fiat currency to a Bitcoin, I would have to go through the KYC and make sure that much cash is available to convert in whatever the going rate is. And what about converting it back? Is it
That
also
is
possible
also
through
possible.
exchange?
Yeah.
And
In India,
also it's possible, but it is for the past, once this regulation has come into being, government is monitoring it very closely, and bankers are also very hesitant to process the entire transaction. Plus, OECD is trying to work on a global platform of the key indications that should be mentioned in this KYC form, so that the tax and regulatory framework can work. Because like for a normal transaction to happen, I will say I'm so and so located at Mumbai at this address, this street, and I am selling this product to you, say in Bhubaneswar, right? And then the taxes apply, and you see whether it is a cross-border transaction or domestic transaction, and you have a street name, you have a house name, everything, right? But in this, it is not traditional way of reporting your address. So government is trying to bring some global parity. OECD is working on it to get what are the things by which you can identify the location of the transactor.
so as long as this was a very democratic and individual based approach where mining and other things are all competitive, it was very fair. If governments start coming in, regulators start coming in, big corporations start taking up a role, would it be as fair as this anymore, or it will be a complete skewed game for corporations and it's all one-sided? I mean, how do you look at that?
I would say it would still be somewhat democratic.
You can add terrorist organization also.
Yeah.
No,
Yeah,
Prasun, I think you can add terrorist organization also to this list.
Yeah,
Right.
I mean, even for NFT, the big IT giants are coming in and creating. I saw the other day there was a board monkey NFT which I wanted to invest in, for example, and then quickly we see that options from Facebook, Twitter, etc. All of them are now available. So how is it panning out? I mean, is it out of the hands of normal individuals? What it was supposed to be, right? Initially, the entire purpose was to beat the formal currency what control of governments and get it more democratized, and now it's coming back to a place where the oligarchs are coming in, the regulators are coming in.
No, the big tech is the government now.
Yeah.
Let's live with that.
Yeah, I would say that since blockchains are decentralized by nature, even if there are big players, the blockchain by itself is still decentralized. There are individual miners and individual verifiers that are still maintaining that blockchain. If some company like Facebook takes over a blockchain, they would have to gain control of 51%, 52% of those miners to gain total control over that blockchain, right? Then you have majority. You can introduce changes, you can add your own code, you can change the algorithm and make it easier and things like that. So that process is very difficult. That's why taking over a blockchain is extremely difficult. So far it has not been done by any mainstream blockchain. If there are small blockchains that somebody made as some classroom experiment, you can have fellow students take over it. It's just 10 people. But for large blockchains where there are millions of miners, it's very hard to do something like that.
So you strike a very optimistic note, I think. Your closing thoughts, both of the panelists, please, starting with Shilpi.
So I think this is a very new age technology. Its adoption is just begin. It is, I think, can be used in many other ways, not just in cryptocurrency, because that's the commercial aspect. A lot of companies are using it for internal process efficiency, bringing in those efficiency and removing these kind of manual errors which happen. There are many use cases of this technology, and it is only time will tell how best we adopt to it, and how all three, the regulators, the entire ecosystem of blockchain, and end consumer like us, play a part in this entire, making this new technology work. But it is there at our doorstep. It is for us to, go ahead and embrace it, I think.
Sure. Kartik, your closing comments, and I do want a comment on use cases. It looks like an interesting topic that we can pick up in the next sessions. Yeah.
Definitely, yeah. So I would say it's, as we basically established, it's still a very new technology. It's very experimental. NFTs are still very experimental. For example, there are many applications that we still have not discovered yet. It's still in its very early stages. I always think of a comparison to the early days of the internet. People used to make fun of the internet. What is this? Web thing? It's all soft. There's no physical aspect to it. What's the use for it? Reading news? There's a newspaper for that. So why do you need the internet? So it's the same thing. The blockchain is so early right now. We don't even know its full uses yet. So there are some people will have malicious means. They will try to take advantage of it. But the hope is, like with any new technology, is that we embrace the positives and take things further that way.
Correct. Gyanendra, your closing comments. You heard a good discussion. I think we are almost in nearly 1 hour.
या एक तो पता नहीं चला, 1 घंटा कब निकल गया, तो सबसे अच्छी बात तो ये है मुझे घड़ी देखना पड़ा था कि यार अभी तो 10 मिनट ही हुए हैं, पर नहीं, इट वाज एक्चुअली 1 hour. And actually I got a very selfish motive to this thing. I'm very happy with this discussion, and I am happy the way it has been brought out, conducted. I see a lot of hopes. I mean, I'm talking about now the medium itself. I see a lot of hope of many more such interactions on our platform, where bright minds like Kartik ji and Shilpi ji come here, share their experiences with us, and enlighten us actually. So this will be going live, I'm sure, pretty soon. We'll do certain edits, and I'm sure you'll be hearing a lot of positive vibes about this interaction. So I hope to see more of these programs, and I'm sure they're multifaceted people, so they will definitely come up with other things also where they can contribute and add to our knowledge. So wonderful! Thank you everybody, and Prasun ji,
Thank
you
you.
can
Thank
do a
you so
vote
much,
of thanks.
Gyanendra. And time of baby boomers and millennials, I think we are now handing it over to the what do you call those generations now? Gen Z,
Millennials.
celestials, I don't know.
Millennials.
Millennials is also past, now
Past,
I
no?
think that you call it celestial. I don't know, some new word which has come up. There are always new words in currency. So thank you so much, and hopefully we will hear more about this. There will be comments coming in, questions coming in on when we put it online. I will be passing them on to you. We will find a platform to address those as well for the users. Thank you so much, everyone. Thank you, Gyanendra, for creating this platform.
Thank you,
Thanks
thank
a
you
lot.
everyone. Palagan to
Thank you.
everyone.
Namaste, Palagan.
Okay, I close the recording.